Good afternoon. This is Dale Snyder with the Snyder Group at Keller Williams Realty here in Las Vegas, Nevada. Chances are, if you're catching this video, you just received our investor newsletter that we send out every 2 weeks approximately, or you just found me by Googling or on YouTube. So what I want to go over is just a generalization or overview of the market, and in addition to this, there are two other videos. So right below this video, you're going to see one that says, how do we get our offer accepted in today's market? And then a dissection of how we run our property performances to get the cash-on-cash return for the properties we're presenting to you every 2 weeks. So let's jump right in. First off, you can find more information on dalesnyder.net about myself and my team, or you can go to our YouTube channel, Dale Snyder 1, to find more informative videos. So let's jump in on what a lot of people are talking about, whether it be just conversation piece with friends, national news, local news, online. There's just a lot going on with the inventory nationally just dropping off a cliff, basically, due to the banks really not foreclosing and releasing inventory. So let's start with Vegas and Henderson. Let's do all of the inventory right now. We currently have 4,820 units on the market, 13,000 approximately in escrow, and 36 sold for the month of March. That leaves us with about a 1.4 month supply, and we're seeing our inventory reduced by about 0.1 to 0.2% per week. So you can kind of do the math on that to let you know where we're going to be if we stick with our current pace. Let's break it down a little bit more. Let's just do single-family homes for Las Vegas and Henderson. You can see we have 1,957 for sale, 8,800 approximately in escrow, and 2,228 sold in the month of March. That's a 1.2 month supply with the average sales price of $59 per square foot, and ridiculous, isn't it? 59 bucks a foot. And 100%, the list price and the sales price is matching right now. Whatever they put the home up for is what it's selling at. Let's break it down a little more specifically, because most of our investors are looking in Summerlin, Lakes, or Pecole. Not to say we can't handle investors in any market in the city, but the vast majority of our investors are in this category. This is the staggering numbers. There are, I did 150,000 max price. Most of the investors are looking in that sweet spot, about 80 grand to 150 approximately. There are 19 on the market. There are 143 in contract, and 53 sold in the month of March. Insane, right? That's a 3-week supply. 3 weeks supply, and it's going down. So we're basically going to have no homes if the banks don't start releasing. Average sales price of 88 bucks per foot, and 100% of the list price or above. I sold about 15 investment homes in the last 3 weeks, which, pat myself on the back, it's very challenging to get offers accepted right now. It's brutal. There's 10 to 20 offers on any home that you look at in this criteria. I mean, if there's only 19 for sale, I guarantee you 15 of those 19 are junk, and they're not going to pencil, or they have bad floor plan. So what we're seeing is the investors are paying about $5,000 to $10,000 above the asking price right now, as long as the numbers still make sense. I mean, obviously, if your cash on cash isn't going to be at least in that 5 to 8% range, you're not going to offer over the asking price. So let's go to the meat of the conversation, what many of you are probably thinking. But the shadow inventory, there's so much left to come. And I agree with you, there is. And I wish the banks and the government would stop controlling the market and just release stuff. So prices are trending up right now because of it. Supply is way down and demand is way up. It's guesstimated we have approximately 100,000 units left to either short sale or foreclose in the valley. This is including more than the range that we're covering, but let's just use the $100,000 units left. The absorption rate, just kind of calculating this real quickly, let's go off March's number. We saw 42,220 sales. If you figure the data out on this, that's about a 2-year supply, which I think is realistic. I think we have about 2 years left of the distressed inventory. But let's keep in mind, if you're looking at the general market, which a lot of it is the luxury sector, which there's another video link below here that you can get a luxury market update. We have like an 18-month supply in the luxury market. And the majority of the luxury sector, 2-3 years of no payments, bank hasn't even filed an NOD. I think a lot of that 100,000 is going to be in the market where the investors aren't looking. This market here, where you get more specific, where there's no inventory, I have run numbers on specific communities, and I think we might have about a year's supply, at most, in these niche communities where the cash on cash makes sense. I hope you found great value in this video. If you'd like to have a conversation, it's really my passion is working with portfolio investors. We've got a great team put together that manages the rehab, the property management side. It's really a one-stop shop, and we look forward to working with you. Once again, it's Dale Snyder with the Snyder Group of Keller Williams Realty. Have a fantastic day.